Howdy, everybody. Welcome to Liberty Call. Today is Thursday, May 25th, 2023. Hope everybody's having a good day out there. You can see my buddy Jake back here. He is chomping at the bit to go outside and play. Yeah, yesterday it was raining, so we did not get any playtime outside. So we had to play indoors, and he ran up and down the stairs a bunch. But he's just itching to get outside. So anyways, if it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. Please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. Kind of a weird day in the market. I mean, I was watching the charts all day, and the NASDAQ was, very much in the green. The S&P 500, a little bit. And then the Dow was like 100, 200 points in the red most of the day. And then late, not really late here in the mountains, but later in the trading day, the Dow went into the green for a bit and then finished up in the red. So it looks like there was positive news from Nvidia. There's a little hope that there's going to be a debt deal sometime soon. Again, I'm not holding my breath. Again, there's not a whole lot of oxygen up here at 7,000 feet where I live. So anyways, all right, let's go ahead and jump into the numbers and see how they turned out for today. The Dow Jones was down 0.11%, 35 points, closed at 32,764. The S&P 500 was up 0.88%, closed at 4151. NASDAQ was up 1.71%, closed at 12,698. The VIX fell 4.84%. It's currently holding at 1906. Canada was down 0.77%. Brazil was up 1.38%. And Mexico is up 0.66%. Over in Europe, Germany was down 0.31%. The UK was down 0.74%. France was down 0.33%. Netherlands was up 0.14%. Let's see here. Spain was down 0.52%. Italy down 0.44%. Switzerland down 0.51%. And Portugal down 1.12%. Russian exchanges both red today. The MOEX was down 0.19%. The RTSI was down 0.33%. And the overnights in Asia, the Nikkei in Japan was up 0.39%. Australia was down 1.05%. New Zealand was up 0.24%. In China, the Shanghai was down 0.11%. The Shenzhen Component down 0.22%. China A50 down 0.51%. DJ Shanghai down 0.15%. Hang Seng down 1.93%. And the Taiwan weighted came in up 0.64% for the day. So again, kind of a mixed day. My personal feeling is that people are kind of sitting around waiting to see what's going to happen. Is the market going to fall apart? Is it going to go up? I don't know. Looking at all the other problems that we got going on in the world, I would personally say that we have a greater likelihood of markets heading in a negative direction than a positive direction, just based on, gut probabilities. It's kind of like I was reading an article earlier today about, he was talking about probabilities of like blackjack and things like that. And, it's really how you have to kind of look at things. I mean, if you've gotten, say you're playing single deck blackjack and you've been seeing a lot of, low numbered cards, there's probably a bunch of tens or face cards in the still in the shoe or in the deck. So you got better odds of getting a 10 or getting two tens or maybe a blackjack. So again, who knows? All right, let's go ahead and jump on over to the market recap. S&P 500 in rally mode as Nvidia's blowout guidance sparks tech melt up. On Thursday, the S&P 500 experienced a surge driven by a strong performance of tech stocks, particularly Nvidia, and positive developments in debt ceiling talks. Nvidia's shares surged 27%, pushing its market capitalization to $956.52 billion, almost $1 trillion company. Bringing it close to a significant milestone of $1 trillion. The company reported better than expected first quarter results and provided guidance that exceeded Wall Street estimates. Nvidia's projected second quarter revenue of around $11 billion, well above analysts' expectations of $7 billion, was driven by the increasing demand for artificial intelligence, which is bolstering chip demand in its data center business. Following the impressive results, investment firm Wedbush upgraded its rating on Nvidia to outperform from neutral and raised its price target to $490 from $290, reflecting the optimistic outlook for the company's future revenue. Nvidia's record surge also had a positive impact on related companies. Monolithic Power Systems, a provider of power management solutions for some of Nvidia's chips, saw its stock rise by 16%. Taiwan Semiconductor and AMD also experienced significant gains. Sentiment in the stock market was further boosted by signs of progress in the debt ceiling negotiations. President Joe Brandon and Republican Kevin McCarthy were reported to be nearing a deal to raise the debt ceiling. Wow, it's amazing. They always come to a solution at the very end. Previously, Treasury Secretary Janet Yellen, again the dumbest human I've ever heard talk, had warned about the risk of a default of debt repayments by June 1st, prompting credit rating agency Fitch to put the U.S. credit worthiness on watch. They keep saying, the U.S. government always honors its obligations. It always pays its bill. No, they're not paying any bills. They're just, running up the credit card even more. Somebody else has got to pay that at some point. I mean, it's probably not going to be me, but all right. In terms of earnings, attention turned to retailers as Best Buy and Ralph Lauren reported quarterly earnings that surpassed Wall Street expectations. However, Dollar Tree saw its stock fall by 10% after its second quarter earnings missed estimates due to declining margins. Goldman Sachs attributed the decline in gross margins to factors such as lower initial mark-on and shift in product mix towards consumables, higher shrink, and partially offset by lower freight costs. Positive economic indicators also influence market expectations. An upward revision to U.S. Economic growth in Q1 and lower than expected weekly initial jobless claims suggested a stronger economy, reducing the likelihood of a pause in interest rate hikes, according to Investing.com's Fed Rate Monitor tool. The odds of a rate hike in June increased from 28% to 50%. In other news, Dish Network saw an 8% increase in its stock price as reports emerged of the company being in talks with Amazon to sell wireless phone plan service via the e-commerce platform, according to the Wall Street Journal. Doo-doo-doo. Good stuff. Good stuff. All right. So next up on the docket, U.S. labor market resilient, declining profits, a red flag for the economy. Doesn't sound good. The number of Americans filing new claims for unemployment benefits increased slightly last week, while the previous week's data was revised significantly lower, indicating ongoing strength in the labor market. According to the Labor Department, initial claims for state unemployment benefits rose by 4,000 to a seasonally adjusted 229,000 for the week ending May 20th. However, the data for the previous week was revised to show 17,000 fewer applications received than previously reported. Economists surveyed by Reuters had anticipated 245,000 claims for the latest week. Although there has been a recent surge in claims, primarily driven by fraudulent applications in Massachusetts. Those dirty Democrats up there, can't believe it. The overall levels remain consistent with the labor market that remains relatively tight, though these low numbers align with recent data on retail sales, factory production, and business activity, all of which indicate that the economy gained momentum at the beginning of the second quarter. Despite the Federal Reserve implementing interest rate increases totaling 500 basis points since March of 22 to curb inflation, the labor market has remained resilient. In March, there were 1.6 job openings for every unemployed person, well above the range of 1 to 1.2 that typically indicates a job market is not generating excessive inflation. Employers have been holding on to workers as they face challenges in finding the labor market in the aftermath of the COVID-19 pandemic. Economists had initially expected an increase in layoffs as the effects of rate hikes and tighter financial conditions spread throughout the economy, making it more difficult for small businesses to access credit. Most economists anticipate a mild recession in the second half of the year. Again, have these people been right about anything? I mean, a year ago, inflation is transitory. It's no big deal. Yeah, well, look where we're at today. These same people are saying, it's going to be a mild recession. Mild. Don't worry about it. The number of people receiving benefits after their initial week of aid, which also serves as a proxy for hiring, declined 5,000 to 1.794 million during the week that ended May 13th, according to the claims report. This decline in continuing claims occurred between April and May survey weeks when the government surveyed households for the unemployment rate. The unemployment rate had fallen to a 53-year low of 3.4% in April. The tightness of the labor market is supporting wage growth, which in turn drives consumer spending and sustains overall economic stability. In a separate report, the Commerce Department confirmed confirmed that economic growth in the first quarter slowed due to business liquidating inventories. However, consumer spending remained strong and businesses reduced their stock in anticipation of a possible recession. The government's second estimate of first quarter GDP growth revealed an annualized rate of 1.3%, revised up from the 1.1% reported last month. The economy had grown at a pace of 2.6% in the fourth quarter. Economists had not expected any revisions to first quarter GDP growth. So that's, some positive news there. So, all right. And last up, it's not really anything of any significant importance. I just saw it when I was scrolling through, I think, Twitter earlier today, and I saw this article. It comes from Fortune magazine. It's titled, "I've Never Saved a Dime. Shark Tank's Barbara Corcoran has spent her millions, including giving half of it away." Now, I'm going to just read through this. I don't have a summary. It's pretty short, but this is terrible advice. All right. Warren Buffett famously said, quote, "Do not save what is left after spending, but spend what is left after saving," end quote. Good advice. Shark Tank star Barbara Corcoran disagrees. She spends it all. The real estate mogul says she's never saved a penny in her life, a philosophy installed in her by her mother. Well, her mother sounds like an idiot. And that by investing it in business or other people, returns have kept coming back. Corcoran, who earned her millionaire title courtesy of her New York real estate business, the Corcoran Group, told CNBC her best advice for making money is to spend it in the first place. Again, terrible advice. I'm a financial planner. You only spend what you have left over. Let's see. Quote, "I'm not a believer in saving money. I've never saved a dime in my whole life," end quote, she said. Quote, "I had a mom who raised 10 kids on a shoestring budget, and she always said money is meant to be spent, and she didn't have much to spend," end quote. The lesson stuck with the property mogul who having sold her business for $66 million in 2001, immediately began plotting how she could spend it. And that's fine. She believes as long as you're spending your money on the right things. The 74-year-old said she gave half of her sale proceeds to family, friends, and education funds, charities, because I really believe if you spend money, money comes back to you, end quote. Quote, "I think the carefree attitude of believing that money makes money if you are willing to share it and spend it really works, or at least it has certainly worked for me," end quote. She continued, "And I don't believe in hoarding money, saving money, everything like that, because for me, it would take my spirit away," end quote. Investing is certainly a key component of her role on Shark Tank, with Corcoran having offered up an estimated $60 million, according to Humble Rise, a website dedicated to the show. Even then, Corcoran has previously opened up about the fact that not many of her businesses have provided huge returns. She's simply in it to support passionate people. See, that's a terrible way to go into investing in businesses. It just makes me feel good. Well, you should probably invest in things that actually are going to make money. Quote, "I've invested in 150 businesses and I made money on about 10%. She revealed earlier this year, "I'm looking for ambition, someone who envisions where they're going, and I fall for it when they tell me they're going there," end quote. The TV mogul, who nearly lost her spot on the panel before an episode even aired, added she's nearly gone bankrupt 5 times and always managed to bounce back. The last time during the 1990 to 1991 recession, Corcoran's mother told her, "Don't worry about the money. It's a waste of time. I thought of an idea that made me $1 million the next week." All right. So what do other Shark Tank people say? Mark Cuban, for one, has the opposite mentality to his panel peer. In 2015, Cuban shared his tips on how to get rich. His advice was pretty simple. Save your money. Save as much money as you possibly can. Every penny you can. Instead of coffee, drink water. Instead of going to McDonald's, eat mac and cheese. Quote, "Cut up your credit cards. If you use a credit card, you don't want to be rich. The first step in getting rich requires discipline. If you really want to be rich, you need to find the discipline," end quote. Fellow panelist Damon John, also a fan of saving, encouraging members of the public to think before they spend. Speaking on YouTube, he explained, quote, "Every time you get $1 or a paycheck, there are 3 ways to spend that money, and people always use them backwards. Number 1, you pay for what you absolutely need. Number 2 is really critical. Invest. Number 3, treat yourself to the things you don't need, but you would like to have." Quote, "People usually do number 3 as number 1. They never do number 2, and number 1 is number 3. And Canadian businessman Kevin O'Leary is also a fan of saving, although not the same extent as of other professional finance experts. O'Leary suggests individuals should, quote, have 3 months of salary on hand in case of an emergency, but not the 6 or even 12 months worth personal finance expert Susie Orman suggests. Again, it kind of depends. I mean, if you're in your 30s or 40s, probably 3 months is good. Now, if you're 60 or 70, you probably want to have a year set aside, just because you don't want to be dipping into your retirement accounts and things like that, especially like a market right now where it's been down for, 17 months now. We've been in this downtrend, the last few months we've just been sideways, but you don't want to sell off your assets when they're down because you want to go buy a car or something like that. So, all right. Speaking to CNBC, O'Leary explained this is because of high inflation rates relative to interest, meaning money left in the bank isn't getting gains it traditionally should. Instead, he suggests saving in cash in a bank account makes basically no interest. Certainly after inflation, investing is keeping pace with the equity and the stock markets. And I think you've really got to understand the difference between the two, end quote. All right. So again, that wasn't really of any major importance, but this is stuff floating around out there in the ether, and people read this stuff. Oh, so if you don't save and you just spend all your money, it's all going to come back to you in spades. Well, not really. I mean, invest in yourself is probably my biggest advice to people. Whether or not it's finances or health or knowledge or whatever it might be. Always try to take care of your physical self, because if you're in bad shape, it doesn't matter how much you save. And invest in your brain, because you always want to be learning, because if you're not learning, if you're not growing, you're dying. And and then, like I said, as far as just setting aside enough money on a yearly basis so that you don't have to starve when you're old or depend on a worthless government, that's the way to go. All right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.